Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's update our view on the gold market. We do not need to talk a lot. Market stands on the way, actually, on the target. We have agreed to consider 1945, 1950 areas, so-called soft resistance. So it means that market has no strict barrier, but this is most of the range. It's just because this is overbought area. We just make really difficult for market to break it. And although there's no clear number where market has to stop and turn down, but in general the area around monthly overbought, it's some distance, some range where market will have feel uncomfortable and will have real problems to break it. And approximately this should be somewhere around 1950 area. So I could just congratulate you with the successful trading of the direction on the gold market this week, as we actually have no patterns, and we said that's possible only to trade the trend direction. The market was behaving really accurately and reasonably, absolutely logical price behavior for a bullish market, with the retracements that we were considering, with any chances to take the position. And currently, actually we're coming to the targets just about the $15-20 per contract, and at this point not many chances for taking the new long position. Mostly we're coming to the final extension. If you'll take a look at the 4-hour time frame chart, this is the pattern that we discussed yesterday. We said if market will be able to erase this top, if you remember, we said that we have to control the taking out of this top if we're taking a long position on yesterday's retracement area. As you can see, indeed, this top has been taken, this ABCD pattern has been erased, and market is forming the upside butterfly. Now it's calling around 1.7 extension, which is a 1938, showing some consolidation here, but it's more reasonable to expect that this will be 1618 and market could reach 1948, which is actually will be precisely the target that we're considering. So that's what we could get in the nearest time. Anyway, if you still holding the long positions, you could currently easily to manage it, just because, as you can see, nice performance yesterday with these pullbacks that we considered. If you have placed stop initially right there or even there, you could now move stops to the break-even and see what will happen. For a new position taking, well guys, it's a bit tricky decision, because you will have to place relatively tight stop somewhere below this area to take the position, and hoping that market will hit 1948 target. And that's what will be a bit, it's possible to do, but it's not as attractive as I would say that taking position right there around the major support areas. So that's what we have on the gold. Mostly I would say that this upper reaction currently is coming to an end, and we need to see what the reaction will be on the major resistance, on the overbought on the monthly chart, and how market will behave. Besides taking position at this point where retracement already is done, it's not very attractive. It could be a bit nervous, as market could show some pullbacks. You could see some divergence here. You will be nervous about the possible bearish patterns. Besides, here's also be real estate market statistics today, so also could bring some volatility. Probably, I don't know, maybe it makes sense to wait for some other setup, maybe in the opposite direction, if we will get some bearish patterns around 1950. By the way, the completion of the butterfly here maybe could lead to forming of the hand shoulders that could trigger the reaction on the overbought on the monthly. That's also possible. But I would prefer to keep positions if I already have it from somewhere from the yesterday's session, or maybe you have taken position even earlier. But at this point, I don't know, I'm not sure that I definitely would like to take the new position here. It doesn't mean that market can't reach the 1948, but overall balance between the risk reward and where I will have to place my stop. So only the more or less suitable point is below these lows. But this minor retracement, we have no really significant protection here, placing any stops below this makes unreasonable taking the position, because your risk will be greater than your potential reward. From that standpoint, this is not really a very attractive point to consider taking the new position. Now let's finish this upper prediction and see what response market will show.